Hello and welcome to Free Lunch here at Zacks. I'm your host, Ben Rains. U.S. markets calmed down Tuesday after Monday's big coronavirus-inspired sell-off. The Dow, S&P 500, and NASDAQ all jumped after Wall Street tries to decide what level of worry is really appropriate in this setting. The coronavirus in China has now infected nearly 5,000 people and killed at least 106. China has tried to limit the spread by restricting travel from the epicenter and beyond. Meanwhile, Hong Kong has reduced the flow of travel from mainland China as the virus has spread to Japan, South Korea, the U.S., and many other countries. This situation is still clearly ongoing and needs to be monitored, but we are going to move on to earnings season because we have some of the biggest companies in the world reporting their quarterly results this week. 3M, Pfizer, and Lockheed Martin already reported Tuesday morning. 3M stock fell over 5% after it posted declining U.S. revenue and provided lower than projected 2020 guidance. Meanwhile, Pfizer stock also slipped over 4% after the pharmaceutical giant fell short of our Q4 earnings and sales estimates. And Lockheed Martin shares climbed after it lifted its 2020 outlook. Looking ahead, this afternoon, Apple, Starbucks, and eBay are all set to report. We will start with Starbucks. The stock has climbed around 8% since it reported its Q4 2019 results at the end of October, until the market pullback recently. Investors need to pay close attention to its same-store sales growth in the US and China, as well as cold drink sales, which have driven growth recently. On top of that, Starbucks delivery, rewards program, and online order and pickup store segments will be vital going forward. Our Zacks estimates call for Starbucks Q1 fiscal 2020 revenue to jump 7.1%, with adjusted earnings projected to climb 1.3%. Starbucks stock is currently a Zacks Rank number 2 buy heading into today's report. Moving on, eBay stock has fallen 14% in the past 6 months and moved mostly sideways recently. The e-commerce firm has fallen behind as much larger rivals such as Amazon dominate the market. Plus, Walmart, Target, and others have boosted their digital initiatives, and Facebook Marketplace has become more popular recently. Today's report will be key as it will show investors how eBay performed during the holiday shopping season. With that said, eBay sales are projected to dip 2.5%, with earnings expected to pop 5.6%. eBay is currently a Zacks Rank number 4 sell heading into today's report. And Tuesday's biggest name is Apple. The stock has climbed over 100% in the last year as Wall Street shows its love for its growing services unit and wearables business. Overall, iPhone sales are expected to return to marginal growth in fiscal 2020. Meanwhile, Apple's services business is projected to jump roughly 16% to $54 billion in 2020 to match last year's climb. Meanwhile, its wearables, home, and accessories unit, which includes the AirPods, headphones, and Apple Watch, is projected to jump 27% in 2020. In terms of the first quarter, Apple's Q1 sales are set to climb 4.1%, with its adjusted earnings projected to pop 8.6%. Looking ahead, investors should pay close attention to early Apple TV figures and any iPhone updates. Apple is currently a Zacks Rank number 2 buy heading into today's report. And that does it for the news portion of Free Lunch, but stick around for today's new Zacks Rank number 1 strong buy stock. Hello and welcome back to Free Lunch. Today we're breaking down why Guess Inc. is a Zacks Rank #1 strong buy stock. Guess stock is up 30% in the last 3 months, and it topped our Q3 estimates in November on the back of solid European and digital expansion. So let's jump right in. As always, I like to start by taking a look at the company's website. Guess is relatively straightforward. They are an apparel and clothing and shoe retailer. We can just quickly see their site. You don't need to know that much more about them. Obviously, they have some other brands as well, and they address women, men's, and kids. And a note just for anyone who pays attention to marketing, they did note that earlier this month they're going to have Jennifer Lopez returning as their global ambassador for their spring 2020 advertising campaign, which I would say is a relatively big deal since she is one of the more popular actresses in the world. So that's just worth noting that they're deciding to spend a little heavily to promote their spring 2020 line. So now we're going to take a look at the company's stock price movement, and this is over the last 3 years. We can see that Guess stock, which trades under the ticker GES, is up about 80% over the last 3 years, which tops its apparel market's about 57% average climb. And then if we go more recently, we can see that over the last year, it's been a little up and down, but since they beat their Q2 results in the summer, we can see that over the last 6 months, they're up about 30%. So that climb has been pretty steady, and as I said, they've beat the last 2 quarters. And along with this solid climb, and this is coming as a lot of the market is becoming a little pricey, their valuations are a little stretched. We'll see that Guess stock is still trading far under its industry's average, and we can see that it's come down significantly over the last 3 years. So as the stock price is up about 80% or so, Guess's valuation is down significantly, and this is forward 12-month earnings, which means their earnings are expected to grow significantly. So they're trading at about 12.8 times forward earnings, which marks a discount compared to the industry's 22.5, and well below its own high of almost 1.4 here, and well below their median over the 3-year stretch. So their valuation picture appears pretty solid as well, along with some positive upward movement, especially over the last 6 months. So now we're going to go ahead and take a look at some of their estimates. So if we go ahead and take a look here, we can see that these bottom line estimates are really headed in the right direction. So we can see that fiscal 2020, let me check that. Hold on real fast. We're going to go back and make sure exactly what fiscal period they're on. Yeah, so they're already on their 2020 results. So yeah, they're currently, the fourth quarter is supposed to, or the full year, we're calling for 3% top line growth and about 39% bottom line growth. So significant bottom line growth, and then another 28% growth on the bottom line in 2021, and steadying sales at about 2.7%. So 3% on the top line for this year and next year, and then really big growth on the bottom line is what we're calling for. And we can see that this has jumped significantly from $1.68 for fiscal 2021 all the way up to $1.74, and then a small jump here for the current fiscal year. And then, as I mentioned, the last 3 quarters, they've solidly beat earnings, especially the last 2 periods. So some really impressive bottom line movement for Guess. And we can also see that they currently pay a dividend, which is yielding about 2.03% at the moment, which is above the 10-year U.S. Treasury notes payout. So along with the positivity on the price side, the valuation, you're also getting a dividend, which is pretty solid compared to that 10-year U.S. Treasury. And as we mentioned at the top, it's currently a Zacks Rank #1 strong buy stock. And that does it for today's episode of Free Lunch. Make sure to also check out our new Zacks.com/promo page for a look into some of our services, portfolios, and more. Also, make sure to tune into Paper Traders, which is live at 11 a.m. on Wednesdays. Once again, I'm your host, Ben Rains, and we'll be back next time with more up-to-date market news in a new top stock pick.